So, guys, the average market expectation, the number that's talked about on the street, is for the balance sheet to fall to around $3.5 trillion from the current level of $4 trillion. Peter Bookvar from the Bleakley Group says, now we got to wait until the next press conference to find out what substantially smaller means. Sarah?
Yeah, and here we go again, trying to debate that. Steve, thank you for summing up those market-moving remarks from Jay Powell. Now let's bring in Don Kohn, Senior Fellow of Economic Studies at Brookings Institute, to discuss all of this. You know, it was such an enjoyable conversation, Don, listening to the Fed chairman talk about how he knows how to, in his head, spell names backwards and play guitar and go cycling. And then he talked about the balance sheet. What would your advice be to Chair Powell when it comes to communicating about the balance sheet and actually trying to unwind it?
Well, so I think this is an issue that the FOMC is clearly wrestling with right now. I think my advice is to continue on the path that they're already on, which is a steady, predictable, slow unwinding of the balance sheet. That will enable them to find out how low it can go and still retain control over the policy interest rate, over the federal funds rate. So I think they're on the right path. I think they're right to be agnostic about how low the thing can go. They're obviously, from the minutes of the FOMC meeting, they're wrestling with this issue. How low can it go, and do we need additional tools, instruments, to maintain close control over the federal funds rate or whatever the policy rate happens to be? But for now, they're on the right path.
Don, a very clear message that he's relaxed about the strength of the U.S. economy. No signs of recession. He was pretty clear about that. But was his tone on the rest of the global economy a little bit more negative than we've heard recently?
Well, it's hard to compare. They expressed concerns about the global economy in their announcement, in their statement a couple weeks ago, right? So this is nothing new, and it's one of the things certainly that markets have been focused on. So I thought it was, he reinforced the message he gave in Atlanta a couple days ago and that have been put out by any number of FOMC participants about how inflation's low, they can be patient. There are two competing narratives out here. One is given by the real economy and the strength of the incoming data there, with the labor market data extraordinarily strong, extraordinarily good. And then the markets, who seem to be more concerned about the downside risks ahead. With inflation low, they can be patient. On the global economy, yes, he was concerned about where that was going, but he also expressed some confidence in the Chinese authorities, saying they have problems, but they are taking a number of steps to deal with those problems. So I think he ended up saying he expected the Chinese economy to cook along at a kind of a solid pace, as he put it.
Can you give us just a little bit of a taste of what it's like inside those policy meetings, especially one like this one, where, as we learned from the minutes yesterday, many were actually in favor of not hiking in December, though we got the hike. How much do they pay attention to things like auto sales, what's going on in the housing market, which is pretty bleak last year, semiconductor stocks, another sort of leading indicator, and some of the underlying fundamentals of that industry also looking weak. Retail, I look at what happened with Macy's today, Apple's warning. How much of that gets discussed around the table? And how does it work with the models?
So that certainly gets discussed, and it gets brought in, importantly, through the presidents of the reserve banks, who are out there talking to businesses, talking to labor leaders, talking to members of the community. So they have a pretty good sense of how things are evolving. They have to put those data and those data points that you just mentioned of particular companies in an overall context of where they expect the economy to go. So I think the readout we got from the meeting, the readout we got from Chairman Powell today, is they still have quite a bit of confidence that the economy is on what they like to call a solid path. It's going to keep growing, and probably growing faster than the rate of growth of potential, driving the unemployment rate down a little more, but with not much inflation pressures. It's a great place to be. So they seem to have a lot of confidence there, with some worry about, am I getting a message from the financial markets that isn't yet showing up in these data that I need to be really sensitive to? So I would say that their antennae are probably quivering more than usual about the stories they're getting and what that might be telling them about the future.